What's up, guys?
What's up, Mr. Norak?
Hello. Oh, excellent. You got talk powers. Yeah.
Oh yeah, I have too much power.
No, that's fine. I wouldn't mind just having a conversation with you. Have your
happy to-
nice even keel. Are you done with work for the day?
I am.
All right. Well, let me say hey to everybody, and then let's chat. So, what's up, everybody? Thanks for joining on the Discord, my close and best friends, and on the YouTube, my esteemed colleagues, and the Trading View, the people I really appreciate the most. And so, yeah, wow. This has been an interesting week. Just wow. I want to say, if remember I had this conversation with someone earlier. If you still have hope, it's probably not the bottom. So I'm trying to get through this little bit of a congestion I have right here. It's probably Corona, but again, it's not Corona unless I get tested. So definitely not Corona. No, I'm fine. So today was interesting. I don't even know where to begin. Tell you what, since you're here, start us off, Ant. What do you think?
It was the same as the past 2 days.
Yes.
It's I think it's the first time, maybe ever, that the Nasdaq has been up more than 1% and ended up down more than 1%. And it happened. That's only happened. Last time that happened 2 days in a row was 2020. I'm not sure that it's ever happened 3 days in a row. I have to do some more research. But
So
the pattern is a pace.
So what is just really, really fascinating? Did we had not last night? Okay. So we noted this week that twice the turn really came at 3 a.m. in the Euro session. And there were like really good opportunities there. But every morning this week was a rally and it just sold right off. And what time did it sell off? Do you remember?
Between 10:30 and 11:30. Usually
It
closer
wasn't
to
between.
11:30.
It was not between. It was
Today was
right
11:30 on the dot.
right at 11:30 today and 11:30 yesterday. And they all had the same setup too. They all had the same exact pattern. And then 11:30, yeah, here. Oh, no, excuse me. It was an 11:30 upturn there, but all inflection points. I caught this one, but man, I would have liked to have caught the others.
It's a change in the auction process when the UK closes, same as the Asia Open and the UK Open and the 9:30 Open for New York.
It does. Yeah, it's definitely an inflection point. And actually, what I've been doing some research this week on some very ancient wisdom. There's this book. hold on, let me see if I can find it here, wherever it is. Let's see. Day trading with short-term. I was going to bring up an edge. This is a book that I heard about on a podcast, Day Trading with Short-Term Price Pattern and Opening Range Breakouts by Toby Crabill. You can Google it. I actually started doing some research on this. Oh, it doesn't have a table of contents on here. But what he basically did was he talked about different time. Okay, here we go. Something like this, where he would look for like a up day, and then percentage of the times that this would come out. So this is basically the pattern, like up day, down day, down day. I started doing a little bit of research. It didn't come up with anything, but I'm going to go down the rabbit hole of looking at the 30-minute patterns because, as I noted a couple times this week to people in the chat or our index trading chat, you had this was the 20th yesterday at the open. You had at 10 a.m., you had an inflection right here. And then at about 11 was really where it topped out. And then 11:30 really started. So it's almost like a heartbeat every 30 minutes. Very cool. Doesn't always work, but it's an interesting
This has been a
pattern to
very
pay attention
structured
to.
sell-off too.
Do what?
It's been very structured sell-off. It's been very methodical.
Yeah.
It hasn't been like a flush.
Well,
there's been end-of-day flushes, but it's not been. It's been very, I don't know, controlled.
I don't know. Nothing about yesterday was controlled. Like that's crazy.
Yesterday was the most aggressive sell we saw for sure.
Yeah, that's very aggressive. And I said it yesterday when it didn't hold the level right here. I mean, it's hard to see now because I can't go back in futures. But this bar right here was green up to here, and what a lot of people, myself included, started to think was okay. It's holding that range right there. But when we started getting down here and breaking these lows now, and what I said, going into the beginning of the year was that I really expected this year, 2022, to have the minus 10% correction, but I did not expect it to happen in January. So market is taking me a little bit by surprise there. But like I said yesterday, we were down about 6.5%. Now we're actually going to the 10%, and so that's going to take us somewhere around here. And so what I'm going to be looking for is basically, what the NASDAQ led us. The NASDAQ led us. Yes, that's going crap. When we closed here on what day is that? That was the 18th. So that was Tuesday, first day of the week. Yeah. I mean, in hindsight, it's pretty apparent, but it was pretty apparent right there. It's just that the S&P was still holding inside, but now, yeah. So it's probably now that we're going to close below the week, we're probably going to come down and basically test the cloud. So I don't expect this to be the end just yet. I mean, it could hang out and basically come back to the September lows, which would also match up. But yeah, I think we're going to get our 10%, 11%, 12% move early in the year, and that's going
We're
to
pretty close.
Yeah, and that's going to, I was saying before we got on here that, all through last year, I was thinking 2017, 2017, 2017. And, here's 2017 up and to the right, just like we had. And then the January that we had back then, let's clean this up. I mean, we had a very different January. This is one of those things where people say, oh, well, you can't time the market, technical analysis. Well, yeah, because things don't exactly repeat. But in spirit, like for instance, you and I both said, what was it on the first day of the year, we were both up tremendously on our long-term holdings portfolios, right?
Yep, a little bit too much. Too
much.
Share your screen in Discord.
What's up? Oh, am I not sharing my screen? Oh, sorry. I disconnected and didn't do it. All right, there we go. Boom. Okay. Thanks. And so Yeah. You sent me a bunch of messages. Okay, yeah. You got to say something live. So, coming into about this same time last year, or it's not last year, but in 2018, you had this huge, just parabolic rally, and then you had a huge comeuppance, basically, where everyone got slaughtered. And this right here was that's an 11% move. So I mean, it looks different, but that's basically what we're undergoing right now. And the key thing to realize about this was that it really psychologically, emotionally just kills that rampant optimism of the prior year. You still in the year higher with a higher high, but 2018 was a very brutal year, a lot of volatility. It wasn't because everyone got used to up and to the right, they got slaughtered, and they have to reconsider things. They're not nearly as prone to just go jumping right into it. I think,
Not as smart as I thought they were.
yeah. And to that point, one of the things that I noted, this week is really everything's coming home to roost, basically, where, really two big stories were, of course, Netflix. And if you look at Netflix, what it has basically done is it has, here was June of 2018. Here's the COVID crash. And then you had this whole COVID narrative. Everybody's going to be at home. Everybody's going to be watching Netflix. The 2 years of narrative wiped out in a month. And
Yeah,
that is
that's
what
why
happens.
everybody says, "Oh, it can't go down any further. It's got to bounce. It's got to be the end." Like, look at ARK. Look at now Netflix. Look at the market the past 2 weeks. Like,
Oh,
you
I'm
don't
so
you
glad to
don't
be out of ARK.
know.
And there's a lot of question. There's always a question when you get asked something, like, oh, what if I got stopped out and the market makers took it? No, I don't care. I'm so glad to be out of this. I gave Kathy a chance, and she didn't hold the 50%. The other one, of course, is Peloton, which is the other COVID narrative that, did it close below its IPO?
I'm not
No,
sure.
it basically is holding its freaking IPO price down here. Like, look at that. I mean,
Yeah,
just the
pretty brutal.
evaporation of an entire bullish narrative. Just it happens so quickly, and that's why, yeah, man, I've been doing this for a while, so I'm really kind of numb to things when I see this. Like, I'm not interested in things like this for this reason. I mean, it's when I see this, I see this.
Yeah, we
Just
trade a little bit different, but you got to be honest with yourself of what you're in it for, right? I mean, are you in it for like a day bounce or two? Like that's different than I want to swing this thing because I think I picked the low, and it's
well, yeah,
not. You don't want to try to pick this low.
you love this stuff. You're doing the BILI, is
Yeah, I
it?
played that a bunch of times. I didn't look
Yeah.
at it today.
Well, it's what I'm not talking about you trying to pick something up on this when it's already getting destroyed. I'm talking about people that are jumping into things here. I mean, that I
That's
don't
the whole
really,
market right now.
huh?
That's the whole market right now. If you look at
Well,
the candles, the
stocks
weekly
only go
candles.
up, remember? And so people are getting really surprised by this. I mean, we got used to. I mean, this is what it does. It lures you into uh, some security where it tests you a little bit on these little 5% that it did all last year, and then it really gives you a test of the 10%. But for those that might be willing to say, "Oh, this is the crash," the dollar's going to fail, whatever the FUD is.
No,
I think what I've kind of like when I'm taking a stock of history and real crashes, like real bear market crashes, they all have something in common. Something bad is going on. Period. Like when we hit COVID, something bad was going on. When we hit 2008, something bad was going on. Now you can say like, "Oh, there's Ukraine, there's Russia," but this is it's just a correction. Now I could be wrong, of course, but no, it's just a correction.
it's one of those things where you could say this is just a correction, and you're probably 75, 80%
Yeah,
likely to
I'll
be
just say with a high
correct.
probability. And if I don't, then I'm just as wrong as what is it? All the people that say every day that the market's going to crash, and the one time they're right. So
Yes,
yeah,
and the market's not. It's just there's just not a panic. Actually, I'm actually kind of waiting for that, for some kind of like panicky flush. Like people, it's been so metered, and so I know you said it was pretty aggressive yesterday, and it was, but it's been such a structured sell. It looks a lot like 2018's. I wasn't trading actively; I was investing then.
well,
But
let's look at
you know,
2018s.
yeah,
Once we do that,
take
we'll
a look
look at.
back.
I gotta look at crypto for the people that want that.
Yeah,
So
but just take a quick peek at the daily on like
2018. Yeah.
yeah, some like the structure of the cell, right? How you just kind of had near the bottom, you had a
Oh,
couple
data
days.
point not available. Hold on. Let's see. Yeah, I want to catch like the intraday because that's what we're looking at on a really close basis. I mean, if I have to, I might have to go to like Thinkorswim. All right. Will you show me the 4 hour? I know you will. Will you show me 2 hour or the 1 hour? Good boy. Okay. All right. Let's see. So this was the 26th of January, 2018, close to around the same time. And so that was on the 30th of January. That's pretty much, that's probably like an overnight major sell to break below it. And so that would have been like your 1% right there. So that's not really that much. That would have made people think, okay, this is just a regular thing, 1%.
Mm-hmm.
And so, yeah, there's your rally. Doesn't quite fill that gap.
It doesn't set a new high.
Yeah.
Doesn't set a new high.
Another big gap down. Probably would have seen that weekend going. And there's where you get like a real bad capitulation. So where was this at? This was off the high. We'll measure it from. That's about 3%. So people are probably not getting worried then. Probably just thinking, oh, this is a 5%. This 930 right here, I bet a lot of people thought that this was like a chance to dip where they fake people out right here. It was the 5th of February. And then took out those stops.
Doesn't make a new high.
There's your capitulation right there. And so at that point you're at the 7, almost 8%.
But look again that you get that big bounce and a drop that you see.
This right here, yeah. Well, here's another big dip. Yeah, these are panics that are getting bought up, and then people think that that's the bottom. Okay, that's the bottom. Oh, now we got some real thought that it's the bottom, and it takes out the stops again.
And flushes and bounces and flushes, but it just never makes that next higher high.
Yeah. So at this point, there we go. So okay. So as we went through this, the psychology was basically you had this one where people thought it was like a quick rally, then this one people thought was a real big panic, followed by again you had these flushes out, and then now at this point where you had like some, I think this is the key right here. You had what people thought was some structure coming on, which made them try to get long off of that, and then those people got flushed out, and of course at that point, once those people are out, you actually get the rally up. So that's the games.
Mm-hmm. Yeah, so that's why I don't. I would be kind of happy on Monday if we just slapped down to like 4,300 and then started putting it at bottom. Just because if we go down much further than that, we have a big problem.
Yeah.
But
I got to say,
I don't want to keep you too much longer on SPY and ES, but that's my favorite. But it's very interesting to watch. I've been learning a lot about auction theory trying to learn more about auction theory. And really what you saw price drop to the old high and fiddle around with it and reject that value. And now it's trying to find a new value. The auction process is trying to price in everything that's been going on proactively ahead of the Fed, ahead of earnings, ahead of everything that's going on. So we could be in for a pretty volatile little span here through earnings for sure.
Yep. Well, speaking of volatility, let's look at the crypto. I was talking to another Discord today, and I like to read a lot of social media, especially in crypto, to like see what people are saying. And one of the things I put out a video about was, this is not a dip. I think I said it somewhere in this realm right here. I hate to say it, but I'm being very imaginative with my targets on my shorts here. And I think probably what's going to end up happening is we are going to come back to like this 36 and do some kind of relief rally. But like I said, it could also be a head and shoulders pattern. And so, yeah, I someone said on another Discord today that they wish they had cash on the sidelines, and I kept my mouth shut. But my thought was like, I mean, I know a way you could free up some cash, but it's really hard to get people out of the mindset that their dreams are not going to happen in a short amount of time. I really think
there's too much belief
mm-hmm.
in crypto. I mean, this is, I know, I just have one of my advantages. I don't have hardly any emotion when I trade, really, partly because I don't
That's
trade with money.
an amazing advantage.
But yeah, there's so much belief in crypto, like that it's the future. And I don't know. I haven't really when it's been syncing up with the indices, and you point that out, they don't really have a lot to say about that.
They ignore it because they think that it's just for stock market is for boomers. They think that institutional adoption is just a panacea of them taking Wall Street's money, rather than asking the question, where's all this money coming to drive the price of my portfolio up?
Is it my liquidity? Is it my liquidity? Well, you are the liquidity, but that's a different statement. But is it your money driving the driving the price up and down, moving the market cap of Tesla, billions of dollars in a day? Yeah, it's probably you.
There's
be Remora, be a leech. Don't try to.
There's a lot of there's just a lot of hopium still out there. I talked to somebody at a meetup a couple weeks ago that he liquidated everything to go to just gold and Bitcoin. Older guy too. So yeah.
Yeah, stocks boomers, but the boomers have all the money.
Huh?
The boomers have all the money. Nothing wrong with it being a boomer.
Yeah. I don't think he was quite a boomer. I wasn't quite a boomer. I don't think boomers have anything to do with crypto.
I just mean people say that stock market's for boomers. The boomers have the money.
Very good point. Very good point. I was looking at this, and anytime that I'm going to evaluate, what we see here, like in this, like somebody asked me what was my target, and I don't think they really wanted the answer. But if you really want to know what I try to figure out, like, okay, if this is a real bear market on crypto, then let's look at the last, like an Ethereum. In Ethereum's case, from the top down to the bottom was like 93% off the 2018. And so the top from the bottom to the bottom of, like, let's say 90%, that takes it down to, well, I don't think people want to really entertain that.
Yeah.
So,
and there's more institutional money in it now, which, I mean, you tell me if this is off, but I believe that there's more institutional money in it now. There should be a little bit more stability against those big drawdowns, but you're going to probably see a lot more structured movement now. I would guess. I'm not sure what you think about.
So
that.
It's. I don't work in institutions, so I'm not going to like sit here and pretend what it is. I really just don't like institutional narratives, and here's a good example why. You remember earlier yesterday where we were looking at, the option expiry this week, and we were all like, this is OPEX, this is OPEX. All the leaps were expiring in the SPY. Like this today was a huge freaking day, and so what we were trying to do is look at the gamma for Max Payne, and that was telling us 460. And of course now it's come down a little bit to more 458. But the narrative was that the SPY should as of yesterday, when we were like looking at it, it's like, oh, and we were right here. It's like, oh yeah, they're probably going to rip this up to 460, but they didn't. And so, I don't like narratives. I like technical levels because
Yeah.
it's. I just think it's kind of intellectual masturbation to sit there and try to figure out what other people are doing, or to assume that people that work at hedge funds are gods. I mean, the people that work at institutions, they're still humans. They're still prone to mistakes. They still have to make decisions. They're still responsible for risk management. I mean, they got a lot of zeros to move stuff with, but if institutions are saying that they're getting involved in cryptocurrency, I have to think that they've been involved for a while and they're talking their book to create liquidity to get out. I think that's another possible interpretation of it. So let's check, see if anybody's asking some questions and whatnot, and also get up my notes. If you guys have questions, speak up.
Do you think we're closer to the bottom than the top
Of what?
of this correction, pullback, what have you?
I got to go with, it's everything I said is going to be a guess, but an educated guess based on what I've studied with, I use Ichimoku because this is going to tell me where a trend is going on. And then if you go up to the higher time frame, you basically go from level to level. And so what you have in a very minor pullback is you pull back to the Tinkinson, the red line, the TS, which is a 9 period. And you do that a lot in a strong trend. And then every once in a while, you get that pullback to the green line. And now that you've closed, you've actually, because you notice here, like a lot of these, this one closed below it, but it quickly recovered. This one closed exactly to hold the red line, closed to hold the red line, closed to hold the red line, held it, broke it, held the green. So it's a very like anything, it doesn't work 100% of the time, but it gives you a very powerful tool for looking at bar closes to see, okay, what levels is this holding as the trend goes along. And so now that this week has closed below, the next level is the cloud. And so I think we're going to go down. I think what's likely is we maybe get some kind of like a relief rally to establish a resistance. That would be my speculation, and we'll finish the full pullback down to possibly down to these levels right here. So it could be that we have a very muted first quarter, and then around April find a bottom. That would be what I would speculate now.
You're giving me confirmation, because I thought we were gonna get that bounce probably today or Monday, and that we would probably end up going down to around 43.30 or so, which is, it looks like it lines up with the cloud, although I did not use the cloud in projecting that.
We could be wrong, and it could just shoot right up and go like that.
That'd be nice. Nobody would be bad about that. Except
then what will we learn?
Short or close. We don't know what the hell we're talking about.
Yeah. Well, we'd also we would definitely not learn proper risk management, would we?
Yeah. Well, that's what they've been doing. Like you said, in every 5% pullback, it's been buy the dip, and it's been right for so long. It's this is the flush out of the buy the dip crowd. I like my lizard. I'm not really serious about them, but whatever causes the most pain for people, right? They 5%. They got you selling down 5% 2 or 3 times the past year, and you're like, this time I'm gonna hold it. It's gonna bounce, and now that's when everybody's not holding through the 10%. And maybe, I don't know, maybe the Vixx is a reflection of that. The Vixx really hasn't spiked up super high, even though we're down twice as much as we were in the December pullback.
Yeah.
So
I want to keep talking about this. Let me answer your question real quick on Dog the Cat. The key spikes where moves are in sync. There was one particular spike that happened. Let me see here. I make a lot of ideas. I can't really search my ideas. 1 second. Let me share you this real quick that you can go through and look at. filter. No, I need to search. I wish I could search my ideas. Let's do. I talk about Bitcoin a lot. So there was. Oh man, that's. I was going to do it by that. Bear with me. So at least 2 times I've noted around, and I'll paste these for you in the chat. There's been 2 times where this was around I think this would have been the Fed meeting in December, and then no, this is the Fed meeting right here, and then there was right there on the jobs report back on December the 3rd. Yeah, December the 3rd, there was a jobs report at 8 a.m. 8:30 a.m. Excuse me, and of course, people were watching that jobs report to know what the Fed was going to do with inflation. And you would think, what does Bitcoin have anything to do with inflation or the U.S. jobs report? But that moved the market up and then tanked the market as well because they expected the Fed to start raising rates, which is bearish for all risk assets, and it tanked at the same time. So this 8:30 right here was when the U.S. jobs report came out, and that was enough to trigger that cascade of stops and really start this bearish cycle that we're in crypto in earnest. Created this liquidation low, and then kind of like a force of gravity, along with other bearish news, it just kind of pulled us down, and then of course now we broke it pretty solidly. So that's why that's why I've been saying that Bitcoin and crypto has become interest rate sensitive, is because all that low interest rate money has been fueling into it, and if the interest rate rises, then there's going to be less of this money to pump into crypto. That's the narrative that I have. I don't know what other narratives may be, but that's mine. I'm sticking to it. I did want to look at one more thing about the SPY in the beginning of the year, and something that was actually pointed out to me on Discord. I don't know if he's in here. I have to go back and look and give this guy credit, but he said something about. Let me go back and look real quick. This would have been around the 4th of January. Wish I could pop out the Discord. Oh, there we go. So this guy Huna was actually correct. He pointed out here where the SPY did this little number right here. And I have to admit, and this is the point I really wanted to make about how this is where technical indicators fall short and why you need a human to actually interpret it, because this right here, these were the highs that it made at the first trading day of the year. And then this is the opening of January the 4th, which of course it spiked us to get us out of that, above that high, and then close right back below it. Now you'll notice how normally spikes, the indicator that I have, are going to find that. And so the question is, why did my indicator not fire for me to say, hey, this is the top? Well, it failed because the close of this bar is 476.93. And the red line, which checks it, which if the bar closes within that red line, it fires a signal, is 476.92. So I did not get an alert on this because of 1 penny. And so,
We've seen that before.
huh?
We've seen that before. 1 penny from the trimmer on various
Yeah,
things.
but this guy right here, Huna in the Discord, he pointed it out to me, and I looked at it, and I didn't tell him he was wrong, but I was like, yeah, it just doesn't fit the criteria. It doesn't like fit the hard line criteria for something to trigger it, fire off the alert, let me get a message about it. But man, that was prescient. That was it. It really was. And that's not the first time it's done something like that. Like back in September, it did that. But man, that 1 penny made the difference in really getting me alarmed versus me thinking, oh, okay, this is fine. So that's something I gotta mull over myself actually, because it would have been nice to catch that. But again, first day of the year, you and I both, we kind of had an inkling, didn't we?
It didn't seem quite right.
No, to have that big of an update on the whole portfolio, no. So every year, gotta learn something again and again. Yeah. So if you guys are hurting, I'm hurting too. Yeah, because I think like everyone else, we came into this year very, very long. Because I had a bunch of winners from last year, but they're all just, they're winning
Getting
less.
screwed up now. Yeah.
Yeah, they're decidedly less. So what else we got going on? Let me check see if there's any comments coming in. You guys can't hear that, but one of my bearings on my I think my computer just decided to go out at the beginning of the live stream here. Okay. No, I got the video fixed. Do you think Powell will help pump the rally? That's a very good question. I think that seems to be. I saw somebody post something about how everyone on Wall Street Bets is pissed off at Powell for not like stepping in, and I guess midday today and saving everyone. But the Fed's mandate has become to save the stock market, but it is not going to save a 10% correction. So no, I think that if the market were to start going into, let's say, a 20%, you would actually see Powell make a comment about it. And 20% would basically be, funny enough, a break of the weekly cloud. Again, it all kind of lines up that way, doesn't it? So 20% would take us basically down to here. So if we started getting, if we broke 400 on SPY, I think that I think Powell would have to probably make a statement one way or another, because they made it very clear they are going to keep the stock market up, but not a 10% correction. They do fancy themselves as economists and historians. I think that's one of the prerequisites for getting the job working at the Fed, and they're gonna see a 10% correction. And it's like, yeah, that's what it does. And so, but a real bear market, they're going to do something about, unfortunately. So, does it help to look at the monthly and see where we are in retrospect?
Just looks like a big reversal candle.
Yeah, pretty much. Yep. So, let's see here. So I'd looked at the COVID narratives in hindsight. Oh, no. Don't leave. Okay. Vixx. So I actually saw something very interesting on the Vixx today, a little fake out. I had this level marked off right here, which was basically, it was like the weekly level on Ichimoku, because Ichimoku is going to draw the halfway points of the Vixx pretty well, but they're all over the place. But I think it was, it did a little spike there. I wasn't watching this in particular, but again, little fake out, held boom to go back up. So I was focused on the indexes right now, but the VIX is going to tell us when this can possibly turn around, and we closed above the level. I think I got to say next week is probably going to be bearish. I think we're probably going to go higher on the VIX, which implies lower on the market going into next week. So that all being combined together tells me that we're probably going to go for that 10%. Next levels on the VIX, I think we'll just wait for a Vixx report on that. But it's one of these in here. Let's see. The scary would be probably all the way up to there, basically the halfway of the COVID. I mean, that's a VIX of 50. Well, I guess it doesn't hurt to send an alert.
You need a big long tail on the daily on the VIX to get this thing turning about with any confidence.
Yeah. See, it back in November, it did that. It did close above the levels here, big solid one. A bunch of mess here on the daily. But here's what's interesting. This is what I was looking at. I wish I was better at reading the VIX, because in hindsight everything's clear. But I think when I did my weekend research this last Sunday, we had basically come to this level right here, 2186, which was the key level. It held it here. Actually, it held it all through December, with the exception of that right there. And then this move right here, January 10th. But this is where it looked like this weekend. And then, of course, we got Monday, closed above it. That's your warning. And then it actually came back, pinged it, and then pinged it one more time and held it. And that's what got us to go up. So that, hindsight being 2020, that's why it makes so much sense to watch the VIX. But sometimes knowing which level it's going to respect is, of course, hard. So, but yeah, it looks pretty in hindsight for sure. So, let's see. Any questions from you guys on the Discord? I talked about. Let's see. Let me look in the just chatting. If you got anything, put in the just chatting on there. Let's look at the others. All right. So, more about what I want to talk about. I made a video. I think I've beat it into the ground as much as I need to about the Activision Blizzard. That was a big play of mine this week. It's basically like taking out a bond with the risk that the executives at Microsoft, or for some reason the government says that video game companies are monopolies. So that was another big play of mine this week, is to play the merger arbitrage. I did it with the shares in a certain allotment, but I also took a option. I also took the 80-100 January 2024 spread, which gave me 1-to-1. And so the risk on that is, of course, that the deal doesn't go through, and the share price of ATVI, in other words, if the deal doesn't go through and ATVI is less than 90, that's my break even, January of 2024. So that's the trade that I took. 2-year out trade, basically, could be. But I'm pretty comfortable with that, because the reason I wanted to do something like this, the reason I'm willing to say, okay, I want a 16% return on this, is because I did the statistics earlier and in the beginning of the year, and it looks like, to me, at least going into it, that we were going to have a 10% correction at some point in the stock market, which looks like we're getting. But overall, we should close the year higher, but it's going to be an average year of maybe like a 6-7% return on the stock market. So being able to take an 11% annualized with a little bit of risk to be left owning a company that I play a lot of their games anyway, I'm okay with that. So that was my trade for this. That was a big play that I made this week, actually. Let's see. I gotta take note of these numbers that I'm seeing right here on the right hand side. Oof. What I say, I've been looking at, I made this post, I think, yesterday or this morning, I can't remember, but going all the way from the COVID low to the high up here basically puts us where there we go. All right, so now we're hitting the level I marked off that we're probably going to get to. And because this is just such a volatile beast, I'm going to expect an overshoot. But yeah, it's got to the level I was looking at. And I can't help but ignore it. But man, look at these double digits here in the right. Not quite there yet. It's going to hit, though. Let's ring the bell. And oh man, it's gonna be like watching paint dry. Anyway, man, man, people don't want to hear what I was my targets on Ethereum at 800. Come on, hit it. All right, I'm getting distracted by the 1 minute. Wow. It's not the weekend I think a lot of people wanted to go into in crypto, did they? All right, I'm not going to spend too much time on that because I want to do like a little, I had a question. I actually made a new channel in Discord for retracements. And if you're on the Discord, I want you guys to go check it out because I posted a couple of things about how I draw off these retracements. Boom, there we go. And so, and furthermore, overshoot. This right here, the retracement that I'm going to draw up is what I would call, it could be either a major low to a major high, 50%, or you could actually call it a launch point. And one of the examples that I made, I want to show this. I literally have, this is how I trade. This is what trading is. Trading is keeping a books and notes of textbook patterns that I want to see again. There were a lot of good textbook patterns this week, actually. And I keep those, and I keep them for my own reference and also for when people ask, because someone asks, I think it was Waze FX, new guy, young guy, he's 17, wants to learn how to trade. That's why I'm here. And he was asking me, like, how do I draw retracements, where I draw them from? And so a good example of that was J&J from last year. This is one of those really beautiful ones that I love to see. I did it in the Discord, but let me just do it right here real quick. So when I look at something like this, it's really, I want it to be clear. And I made the reference to William Rehnquist, who's a judge. He had this case where he was someone was being tried for obscenity. I think they were like a pornographer, and he made this really infamous statement where, he said, can you classify obscenity? And he said, well, I knows it when I see it, or I know it when I see it. So that's why I say about the experience in picking highs and lows is really key, because it's really easy to see here a low and a high. Okay, because you've got a major swing and then price comes off of it, and then it tops out and has a really strong reaction off of it. And so, a lot of people might get a little held up on like things like this. Oh, I got my mag on. Things here. No, majors, a real trend. And so from here to here, you create the 50%. And then additionally, what I'll do as a second step is draw a line there at that 50%, and then go see, does it match up with other points of inflection. And when it does, it can be a very, very pretty reverse and hold. The other example that I talked about was, of course, Tesla, which was another point. This is what I call a launch point. And what that basically means is you could use this low right here, but really this is where the trend started. It stopped making lower lows here at this point. Like here's a higher low. And so you can really say this is where the trend began. So that's going to be the first point that I'm going to draw it from up to the high up here. And then you had that really nice match of the past all-time high. And it's no wonder that it did a quick reversal from here. Now, did this go on to $2,000? No, but there's money to be made in this trend right here for sure. A lot of us were in it. I was. So that's what I want you all to practice on that. Practice is really key. And honestly, if you notice, and Jen got on to me, and I got on to myself because it really does hurt my eyes. The reason I've gone back to a darker screen is because it is easier on the eyes to look at if you're looking at screens all day. But I try to use white backgrounds because you sure as hell can't print this much ink. So sometimes what I'll do is I'll switch back and forth, but keep yourself a folder of trades. And I think a really good thing that keeps me from taking dumb trades is asking myself before I take something, is this something that I'm going to want to print out and look at later? Is this going to be a textbook trade? Or is this just going to be throwing something out there against a wall? Because I want all my trades to be able to make some kind of sense where I can justify it to myself later. I don't want to look at a sheet and be like, yeah, that was pretty dumb for me to buy there or sell there. No, I want to be able to justify it. And these clear trades, they happen. I mean, man, just like today, you didn't need very much risk to play. You didn't need much risk to play this 11:30 reversal. You got around to 11:30 here. This is the ES. And then you come up, there's the 11:30 right there. So you start topping out right here. What I like to do on these potential reversals is you take it here to here. Here's a key thing. You remember how I was talking about on the SPY? We'll come back to that. Where in the weekly trend as it was going up with Ichimoku, let me add Ichimoku. I take it off to make it clear, but let's put it back on. So in a major trend, oh, that's too cluttered. Okay. This is why I take it off. It's too cluttered. I want to show for myself and you guys, I want to show the key things. I want to see a close below the red line as your first sign of weakness. Okay. Just keep that in your mind. And once you have that, you can then start to aggressively try to play some kind of reversal. Yes, it happened time and time again through this trend, but this is getting around that timing element of 11:30, so I'm really looking like a hawk for it. And so with that, you can set up a trade, and you really don't need to give it much more room than right above the high. Take it back down to the 50% of the prior day, the move up. Now, let's talk about this stop up here. So I don't blame you if you're a little resistant to put a stop above the high because of how they talk about the lizards sweeping the stops, and the lizard whales, whatever they are, about taking out stops. But just really look at this reversal right here. Okay, this worked. This reversal freaking worked. If it's going to work, it really shouldn't threaten your stop. Like, you're not going to win every trade, but on some of these where it just works, there was no danger, it never really threatened it, and you were fine. These are the kind that you need to be patient for and take. And then don't worry about putting your stop here, because if it really starts to break above that, then it's probably not going to reverse. Like, here's what I watched the RTY, because the Russell futures today, because what they did was they did play a lot of games for people that were trying to buy the dip. Like if you tried to buy it here, they may have taken you out, boom, here, and then it's like, oh wait, no, here we go. There, I'm going to buy it and put my stop, just boom, and they take it out, and then they start tricking people into thinking that, oh, boom, oh, they just took my stop right here, so I'm going to go in, and then, oh, they just took, and on a broader, they took my stop out, so let me do it. Yeah, no. If the reversal is going to hold, it should hold. So just kind of keep that in your mind when you're trying to play these reversals, and just you get a little fooled sometimes on one day where they come and they ping your stop and they fly it back up, and it gets you into this mode where you're like, oh, I'm not gonna let them beat me again. Just let it go, because you just don't.
If I could interrupt for a second, you make
Sure.
a good point. And also, when you see like you're showing that example there of where it didn't work, like they're taking my stop, it's you don't want, in my opinion, when you're day trading, you don't really want the second, third, fourth touch to a spot, because it's less and less and less and less and less likely to hold.
Yeah, it should run away.
It's like a ball bouncing with lower bounces, and then it just drops to the floor. You don't want that in general. So you want that quick, fast move off of a level, ideally, if you're going to day trade stuff like that. But to your point, you got to set a relatively aggressive stop, and you almost want to try to buy the spike of the spot where you're trying to buy. If you can get a spike of it, it's a better risk. It feels like you're catching a knife, but if you charted the right spot, you want to buy that spike of it or sell that spike of it.
Mm-hmm. Yeah. And also trading at the right time is important too. I mean, the money was made from basically 10 to noon today. And just like yesterday, I mean, this right here was a trend that was in like the zombie hour, basically, because, I mean, no one was there. But again, the rally happened from the open up until for that hour. And so that's where the meat of your trends are going to be, is in this area right here. But then you start, here's the 19th, which was 2 days ago. It's another one of those things where you're trying to, let's just say that you're trying to long it here, or you're trying to short it here. I mean, look what they're doing. That's in those time periods. That's when they're basically taking out your stops before going the way, and that'll piss you off. And the way you can avoid getting pissed off is just trade during those main hours of the day. That's key. Play video games in the afternoon, or don't, or do something productive. I don't care.
A little Valheim.
Play some Valheim, yeah.
A little more. I don't know who here the day trades. I know that some people have been messing around with it, but in my opinion, you don't, unless you've really got a spot you like. You don't want to take the first 30 minutes.
Wait, say that again.
Unless you've really got a spot you do like on futures, you don't really want to take that first 30 minutes purchase. It's just you're in for.
Oh yeah, no.
Today is a great example of why you don't want to do that. Unless you're amazingly fast and amazingly accurate, you could have gotten destroyed today in the first opening 30.
Well, I've got enough, I guess, experience to take a look at, like, here's the open. 9:30. This is the Russell, but it's just the same. Like, I can take a look at this and be like, okay, yeah, time to kick my feet up, get another cup of coffee. And then what basically happened this morning was they did what was the equivalent of a fake out, a stop run, right, to get the longs out before they rallied it. And yeah, that was a fake. It basically was a fake out to a fake out if you're really sitting in the daily. So it's very, very hard to trade, but yeah, that's where the meat was. Turned around and went.
Check out the 15-minute real quick.
Oh, the Russell or what?
Just either one. This is not a leading thing, but you can see that quick reverse, that big reversal candle on the 15-minute. Like it's a big bullish engulfing candle.
Yeah.
That's a pretty strong indicator that it's flipped, right?
Yep. There was actually what happened earlier, I got this notification for a spike on this one, which of course it stopped out now. And it came in at 130. I'm noting this from my reference in the future, but because I didn't like it that I missed it, so I didn't want to have FOMO. But what happened was this: you got that notification here. That's when that came in, and then of course it rallied off of that. There was this brief little move right here, and I thought it was very interesting. You had 1, 2, 3, 4, 5, 6 bars right here where you could have said, okay, wow, I was holding that level, and there was a nice long trade on the rally up here up to the 1130. So I actually took a screenshot of this from my log because I want to look for this, because what happened to me yesterday on that breakout, and I was really upset that I missed it. There was also I basically want to be able to play breakouts and not miss them in these rallies, because it gets really hard because you don't want to just buy it on the breakout, but you may get like a little instance in here, like a little short term pullback while the trend is still going, the breakout's still going. So that's something I noted for today too. So yep. Oh wow, we're already at 5 o'clock. Did I talk about everything? I think so. Yeah, Vixx, COVID narrative, hindsight, retracements, and yeah.
Norak, where should I put my money? The market's crashing.
Someone asked that earlier today, or this week. They'd done the research and things were pulling back to the levels that they had marked off to buy it, right? It's I don't see why it should. I mean, you do your research in times of happiness, like on Apple. When you're looking at, when I was looking at Apple, I marked this off here. So, when Apple was sitting up here, when it pegged its 182.86, was it? Yeah, 182.86, which is the $3 trillion mark. When Apple was at its $3 trillion mark, that's when you should be doing your research to say, okay, gee, I really wish I had Apple, but I don't want to buy it at this level. So let me figure out what my buy level is going to be. Well, let's go to the last all-time high. That's a pretty decent level to look for. Let's look for a retracement, because that's what Norak told us to do, from basically the low it made in October. And so, all right, I'm going to go in here and I'm going to set an alert where I'd like to buy it, because I'm thinking an Apple is $182 mode. Okay. Would I like to have Apple when it's $160 on this day right here? Hell yeah, that'd be awesome, because Apple's $182 $3 trillion company, right? Whatever. Now that you're down here, why does your mind change? Is Apple a $3 trillion company or not? So that's how I'm going to close things out, unless anybody's got anything else. What's up?
Are you trying to get me to buy something on fundamentals?
Lulz, I know what you're trying to do there, but the fact that it got to seriously, the $3 trillion mark was 182.86.
It got it in the overnight.
It was 180. I don't look at the overnight stuff, but yeah, maybe it had. But just look how perfect that was. Look how perfect that was. Oh my God. And so, okay, do fundamentals matter? I think they matter that people were looking at that level. That's what matters. What matters is everyone knew that's what the number was. Yeah, that's what matters. All right.
All the lizards knew.
All the lizards knew. Well, figure out what the lizards are doing. Jen, no. Okay, that's a really good question. Yeah, let's talk about that. So, as far as mergers go with ATVI, the standard way to do a merger arbitrage is to buy the company being bought out and short the company that's being doing the buying. Good example of what's going on. And so no, but the difference is with the Activision Blizzard merger. Let's see, hang on.
While you're pulling that up, that volume today on this ES sell-off, gigantic.
Well, if everybody buying, there's somebody selling.
Oh man, it is very true.
So this is a cash buyout. Okay, so they're buying with dollar per share, not shares. The other one is, let me bring it up actually. I'm pretty sure I put it in the Discord. Is AMD buying XLNX. And this is actually very, very, very interesting because this was 2 days ago. Oh, go. Is it because I have this thing on, or is it? I'm sure there's an add-on that I don't have enabled in this profile. Anyway, this is a stock buyout with XLNX, and what they are doing. Okay, what they're doing is they're going to give 1.7234 shares of AMD per share of XLNX. And what's happening is that normally what you should be able to do is short AMD and buy XLNX, and then they'll eventually come together. But because XLNX is going to take Chinese approval, it's not a guarantee. And the spread, let's do some magic with a trading view right here. So AMD is trading at, I already kind of have this up. 1 second. So on the left is AMD, on the right is XLNX. Why do I have this marked off at a level? Oh, look at that. Look at where AMD got down to. Interesting. Anyway, so that's AMD, and this is XLNX. All right, so XLNX is trading at 187. And so what you need to have, what they're going to get is, hold on, I got to think about this math-wise. So let me go back and read it here. XLNX shareholder exchange ratio of 1.72 shares of AMD common stock for each share of XLNX common stock. Okay. So for every share of XLNX, they should receive 1.72 shares of that, of AMD. Is it just that the arbitrage doesn't make sense, or... Oh, no. There we go. Okay. AMD times 1.72. I got to multiply the AMD one, 7234. There we go. That's how the math works out. All right. Yes. All right. So that's a little cool thing you can do in TradingView, where you can actually do math against the instrument. So what you should be receiving, because you'll get 1.7234 shares for every share of XLNX, that means that right now XLNX should be trading at the closing price of 204.76, but instead it's trading at 187.84. What does that mean? Well, if you're going to get that many shares of AMD, then you would think that they would be equal, that you would have a share price right now of 204.76. on AMD, or excuse me, on XLNX, but instead it's 187. So let's call it 204 minus 187. 187. It's got about a 9% difference. Now this was actually much higher. Like going into the week, it was like 19%. I think this sell-off right here on AMD has really kind of cut into that. But that's still a pretty big premium for something that's supposed to happen within a month or two. And I think that's because they think that China may not acquire it. But there's rumors abound here and there. But what you basically do in this case is you try to short the equivalent of AMD and buy XLNX, and then they would eventually come together, and that would be the merger arbitrage here. But there's just been, it's actually, I was reading some about it on Seeking Alpha, which I can't bring it up because I don't have the right items to block it, but it's actually been quite a pain trade for a lot of merger arbitragers because it's been so uncertain that the spread, I think it began at like maybe in the teens or something like that, but it's actually widened and probably stopped a lot of people out. So this has been an example of a merger arbitrage that's had a lot of pain. So they don't always work perfectly. They don't always work flawlessly. But these are two different types. This is an all stock merger versus an all cash, which is the Activision Blizzard. All right. That's the gas that I have for today. Thanks for joining me, guys. Let me make sure there's no more questions before we end it. Yeah, arbitraging is hard on the brain, but I think the rewards are there. It's just a different discipline of trading. It's for people that want to, go, oh, Dogecoin. I mean, what do you really expect out of dog money, Josh? Oh, it's coming back to its low. Shiba, oof. Still short. Man, I've taken a lot of hate and internet trolling over talking about Shiba going down. Have a good weekend, everybody.